Good evening, Ira Epstein, and here we are on the evening, and we are on Wednesday, the 25th of May, 2022, getting on past 5:30 in the evening. So we have a stock market that if you're watching TV, and during the day I've got a lot of different screens in front of me, they're all on. And I watch and I flip back and forth between Bloomberg, CNBC. I want to see what the individual stocks are doing. That's great for CNBC. When I want to see the general markets, I think Bloomberg's got it beat for what they do. But everybody does something different. They're all very good at it. And then there's Fox that does a mixture of different things. But why am I hearing so many people saying interest rates have peaked and the market is ready for a 15% bounce in the stock market? That is the word that I'm hearing. The market's ready to do that. I don't see what these people have seen. I can see pauses, but they're talking fundamental shifts. And do you think the Fed's done this fast? It would be the fastest hiking and then backing away from it I've ever seen. Everybody does agree they're going to go June and July. I've not seen anybody say that. But right after that, I've been watching people like a lady from John Hancock Investments today. The market has made its high on interest rates. It is going no higher. You have seen your peak. That will cause the buys in this. She may be right. I'm not knocking her. Believe me, if she thinks I am, I'm not. It's another thought, and I want to give her all the credit. Everybody else dances, they don't say. That's what I think. So I like that she said it. She backed it up as to why. It's an opinion. Do you think anybody really knows? We judge it as we see it, and then you watch the charts. At least that's what I do, is I call them the tea leaves. I pray that I can read them in the morning, right? And you go with it. But I like chart action because it's a summation what everybody thinks with their money. When you come on and you say, I think the interest rate has peaked, what are you backing it up with? Okay, but when I look at the market and I tell a trader, hey, buy the market at XYZ, whatever it is on the marketplace, that is my conviction. And if they do it, that's in the price of the market, and people are doing that. That makes charts to me the place I want to be. So as I'm looking at the S&P and I see the bounce on a weekly chart, and we are up 2%, I have a hard time hanging my hat that that's a bottom. I don't see it. Markets take time to make tops. They generally take time to make bottoms. You have gotten yourself under the 18-week average of closes. You hadn't done that, you'd have to go back to last summer for that. Actually, that's back here of 2020. I'm just looking at that. That's 2020. This is 2021. So that's when you'd have to go to it in order to see when that market was doing it. Things take time. Could they be right? Yes, but I'm not saying it. When I look at the daily bar chart, we had been in a downtrend. I think that's very evident, and the game changed. Today, if you take a look at the chart X today, you've had a recent pattern of lower highs, lower lows, and that would be the most recent rally high, and you broke through it. So the market has changed its nature today. Today, the market's got a pattern of higher lows, higher highs, until you take out 38, 71, 75. But even if that were taken out tomorrow, then you'd have a higher high and lower low. So you've broken the downtrend. You've created an uptrend, but what kind of trend is it? The fact that you're under the 18-day average of closes tells me it's a rally in a bear market so far. The way that I will teach you in the courses and everything I do is you learn where the bias is. When you're under the 18-day average of close, the bias is down. You can get contra-trend rallies. You hear that all the time. They can gather some length to them. But you also want to go and look at the weekly chart to see is the bigger picture there. And we'll cover that this weekend. I'm not going to cover it today. Suffice to say, we are in a bear market rally. The resistance is 40.14.5, let's call it. The market has hit and bounced away again from Bollinger Bands. It was running it for a while. Then it moved to the right-hand side, ran to the 18-day average, fell back to the Bollinger Band. And until this pattern's broken, I should assume, I think, that the 18-day average is acting as the barrier in the market, and that's where I'm at with it. When I look at slow stochastics, the momentum has turned up, but it's been oversold. It wasn't embedded. When it was embedded and lost it, it made its run to the 18-day average. This time it's working its way up. That's okay. I don't think the pros are going to sell into it. Why? Because you've got the pattern of higher lows, higher highs. But there's no reason to buy to get up there because you're under the 18-day average of closes. The NASDAQ is not similar. You haven't broken the pattern of lower highs, lower lows. You have to get up and over these highs to do it, and you haven't yet done it. Still bearish, but oversold. In the Dow, what a crystal case. If you get these rallies, you come back to the 18-day average. You broke back to the Bollinger Band. You're coming back here. Okay. Is there anything on this chart that can turn me bullish in my swing line? No. Even if I take out this high, I'd have a higher high and a lower low. I see where the resistance zones are, clear as can be. I just don't see anything to buy it. What I do see are reasons for the aggressive shorts to be selling it. And that's right here at this 32,163 area. So we'll see if they do that and what the market's made out of for them. They'd have to bail if the market gets, oh, I can't make that work, unfortunately, if it got up over that. We then get to the Russell, and the Russell's up at the 18-day average, and it's out of its downtrend. This market had a lower low. Now it's got a higher high, momentum up, battleground 18-day average. I don't know what to do with it. Even if it goes up, you can't say it's in an uptrend. In the VIX, you're in a minor downtrend with lower highs, lower lows, which bodes well for the stock market to go up. Now, if you take out 2806, the odds are you're going to get down into this 2600 to 2524. But if you get down there, that means the stock market's likely going higher. Let me give you the flip-flop. If the market can get back over here, the 3107 level, you got a new problem. If you don't take out 2806, this was just a small correction. Now you get higher lows, higher highs. It's the weekend coming up. Volume's falling off already, so just use some caution. In the T-bond market, if you were sitting next to me, you get the old elbow in the rib cage saying, why are you staying long anymore? The trend has been up. The market hit its upper Bollinger Band, and you want to walk away. Here it is. You get there, you want to take money off the table. Can I make it any clearer? Now you go away. If the market embeds, we get more bullish, and then I guess we have to join the party and tell people that, hey, maybe the market has seen the worst in it. From a charting point of view, hasn't embedded. I don't know that. 10-year note, same darn thing. You're getting that elbow. Are we embedding? Well, let me get rid of this at least. You need another day to know if you're going to embed. It takes 3 days in a row of the blue and the red over that. If it gets it, you're already at the upper Bollinger Band. You need breaks to buy it, not to buy into a Bollinger Band ever. Why do you never buy into a Bollinger Band? Because the market only stays over it or under it 5% of the time. So if you're buying it, you want to be in that 5% that are going to stay over it. You should go to the casinos. They need you to build new casinos. Bailey got approved today in downtown Chicago for a big casino. I can't believe it. If the gaming board approves it, which looks likely, we'll have a huge casino. I can literally get there in 10 minutes from my home. It's nothing. I can't believe it. You know, it'd be nice if they bring in good entertainment and food. I'd love it. I don't gamble. I go to Vegas. I'll pull up X amount of dollars out of my pocket. If I lose it, I'd rather go to a movie. I'd rather buy a ticket to go somewhere. Not interested in a free room. Don't want to be obligated. I have buddies that are whales. At the end of the day, they lose. They'll win for years, and at the end of the day, they lose. They all tell me it doesn't matter because they're getting so much anyways that it balances out. That I get. But they're not going there to win at the end of the day. And by the way, I've gotten to stay with them and love it. You know, we do boys' trips. I'm still an older guy, and we do boys' trips. Lower highs, lower lows, market going down to that number. Okay. But what are you supposed to do? You're supposed to be walking away from shorts. What are you supposed to do in the euro when you get to the upper Bollinger Band? You're supposed to walk away from the long side. You're not embedded in that market. British pound. If it can reach up here, great. Now, they came out with the end of the investigation, if you will, of Boris Johnson and the Partygate and all that he's had is out. And he certainly looks like he's got himself into some really serious hot water. But he is the Teflon man. We'll see if he can walk himself out of this again. You are overbought, market coming up here. We'll see what goes on. Remember, everybody in Europe is also talking they want to raise their rates. So the shift that has happened, and it is a seismic shift, is instead of the U.S. being by itself and raising rates, and we were, now everybody has joined the party. Well, that means you don't need the dollar so much. Now you can look at other currencies saying, how's their economy look in comparison? What are they doing? Is there more pizzazz in that? That's what's going on, the shifts. In Bitcoin, the market is still looking to me like it would try. It's trying, but it's doing a terrible job of getting back to the 18-day average. And what's happening, unfortunately, is instead of the verve of the market picking up, it's relying on the average to come down to it. That's not a bullish story. So I'm very disturbed by that story in the market if you're trying to be on the long side. In Brent and WTI, the market keeps sticking its head up, but can it stay over this 18-day average? It's flipped over it, no question about it. I can't do that. Had it been under it, so that favors WTI. The trend is clearly up. The market might try to put together an embedded reading. Not yet. You need 3 days in a row of the red and the blue over 80. You're not there anywhere near it. Or WTI. You're working on it, but you're not there. Resistance in both are their upper Bollinger Bands. Gasoline, the correction took place. The market's fought its battle, and it flipped on you again. Good. This one's letting me do it. You had a pattern of lower highs, lower lows, and here's that pattern that I told you on one of the other charts. If you take out that high, you're suddenly bullish again. Watch. Bingo. So you've put the bull play back in. You'd have to break through this 350, 370 to be bearish. The target's 386. 386.62 for gasoline. So we'll see if it can get up there. And in nat gas, told a lot of traders that had given me calls, do I think it can clear the $9 mark? I said, yeah, but you got to be out. It's a big, important number. Today. I love it. I love it. And you're not embedded. I don't care where it goes now. I am a super bull on this, but you get to these points where there's money that's got to be taken off the table. You know, we've got these new customers called Europe, and they're going to want everything we can give them. It's going to drive prices higher and higher until they're high enough where the market's in equilibrium, and that's it. But I thought the first number to go through this high was going to happen, and I'm happy. But that brings me to my charting course for you. And let me tell you about this. If you think you can master 5 indicators, I want you to stay tuned. I want you to stay with me, and I can teach you those 5 indicators. The first one, swing lines. I'm going to make you take our charting software and draw lines and follow from highs to lows and how you do it. Once you know how to do it, you know how to use it. If you don't know how to do it, you can't use it. Slow stochastics. I am not in the base course going to teach you the enhanced. I want to teach you the basics. There's so much to learn in that. Then Bollinger Bands, going to teach you the basics, and then I'm going to take you to the enhanced version. I've made the enhanced Bollinger Band course all one. I call it enhanced Bollinger Bands, but it's both the combination of slow stochastics and that. It's the course after. But you're going to learn how to do this. Something you don't see here are window envelopes. You've got to learn window envelopes. They're beyond important. They're super important. And then you put it together. The course is 54 videos, 8 hours of videos. It is not a race. I expect it'll take you an hour a day to get through the course, a review. You're done in 2 weeks. If you want to keep reviewing, that's up to you, but you're done. It is not a race. The way I teach, each course is built on its own, as that each chapter stands by itself. Don't go to the next chapter if you didn't learn what's in that first chapter. I'll create a PowerPoint, then we're going to look at charts. A lot of the charts I'm going to take the name off of. I don't want you to have a presupposed idea of bullish or bearish. In the mornings, each morning, when you're taking this course, you're going to get access to my morning subscriber videos, both Spider and ETF, if you want to keep up either one, so you can keep up with what you're learning. So you're going to see, there's the swing line, and I will bring this stuff up. Then you're going to say, oh, look at that window envelope. I don't see that on the end of the days. This is where it is. Now I see why it's so important. The goal is to make you your own trader where you don't need me. It's not hard. It's 5 indicators. It's not 50 different things. None of the indicators do anything but filter the indicator before it. Does that make sense? All I need is one to say no, and I'm not interested in a trade. I'm looking for reasons not to put on a trade, not looking for a trade to put on the reason. Does that make more sense? So you're filtering, you're going, everything's there. I don't care what the name of the chart is. I could care less. I care the dollar risk. You're going to learn risk management, how I come about that, and how you're going to come about that, be it in stocks, ETFs, futures market. You put this all together, and the name of the game is to give you something you can work with literally as long as you want to be a trader. If you think you know what you're doing already, I think I can teach you a thing or two that might help you. Look at what you're doing and rethink what you're doing. Not everybody knows exactly what is going on, including me. Why do you think I create new courses? I learn new things. So you're going to get the research that I do. You're going to get the course. It's not expensive. You're not going to have to ask your special other one in your life, am I spending too much of our money? How do you get to this? It's simple. You can go to our website under the word education and/or just follow my cursor right up here and give it a click there, your cursor, and you'll get to the course too. I'm Ira. You have a great day. Talk to you tomorrow.